everyone, this is Dr. Tom Carr, aka Dr. Stocks of drstocks.com, drstoxx.com. Welcome to the fourth and final part of this four-part series on how to find the best trading stocks or the best stocks for trading. And in part one, we learned about my basic stock scan, which incorporates both fundamental and technical indicators, filters rather, to highlight a short list of stocks that are poised both fundamentally and technically to move quickly over the short term. And in the second video, you learned about a very quick, easy two-click way of eliminating the bottom tier of those stocks from your list. And in the third part, we looked at how to begin to whittle down your list using some technical analysis on the stock charts. Now what we're going to do is talk about finding the very best stocks for trading and how to determine entries and exits. So if we, let me just go over what I did today, because we're in a very sharp market downturn right now. We've had 2 weeks of very hard selling in the market. A lot of great stocks are trading at very low relative strength, which is a temporary problem. But I had to tweak my RSI indicator. I went from 50 down to below 40. And then I also lowered my EPS growth this year to over 15% instead of over 25%, just so I could get a good healthy list of stocks. And then I double clicked on the PS valuation metric, and I eliminated the stocks that were at the top of that list, not all of them, but a handful of them. And I ended up then with a short list of 3, 6, 9, 10 stocks to choose from. And let's see if we can find a good trade from this list. Now what I do right off the bat is I go through these stocks one by one and eyeball them, and I'm looking for a couple of things. I'm looking for a steady uptrend that is sustainable. And if you've taken any of my webinars, you'll know what that means. We're looking for an uptrend that is not at any angle greater than 45%. And how do you tell whether a stock is trending greater than 45% in terms of its angular momentum? You simply draw a line. You can do it in your imagination. You don't have to do it literally, but you can put in a literal line from lower left-hand corner to upper right-hand corner. That's your 45-degree angle. And if a stock is more or less in line with that, as it was back here earlier on in this trend, this is Western Digital, then you're in a good shape to consider buying that stock. When it starts to get greater than 45%, that's where you start to see the trend becoming unsustainable and starting to break down. And I don't like this stock right now, Western Digital, for a long play because it has broken its trend. So it's no longer in what I would consider to be an uptrend. We're starting to see lower highs. The lows are sort of peaking here at around $76, $77 per share. So there is some support right now, but it does not. It's not the best candidate. We've got the, let me scroll in a little bit to show you how I've set up my chart here. This is my standard swing trading setup. I've got the 20, 50, and 200 period moving averages overlaid on the price chart. Those are different colors and different thicknesses, so I can keep them straight. I've also got volume with a 13 period moving average overlaid. I've got the MACD set at the standard default settings, 12, 26, 13. 12, 26, 9. And then I have stochastics down here at the bottom set at a default setting of 14, 3, 3 smoothing. And those are the main indicators that I use. I'll occasionally will look at something like an RSI or a CCI indicator to confirm, but these are the ones that I use to eyeball the charts. And again, I don't like WDC because it could not sustain its uptrend. It was going a little too far too fast, and it's now in a period of downward consolidation. So we're going to pass on that one for now. ALV is it's mostly in a sustainable uptrend. It's currently in a fairly strong part of that uptrend. 20 is above the 50, 50 is above the 200. We've got nice spacing between the three. You want to see that. And we've got this real shot up, which was on earnings with a lot of volume. That's very positive. we've got to pull back into that gap, hitting the 20 and reversing. So this is a nice little swing trade, and I would consider entering this at round 142. This is Auto Live Incorporated. Have no idea, know nothing about the company. Haven't heard of it until just now. But anyway, so that would be a nice little swing trade. Where would you put your stop? Well, your best stop is below the 50-period moving average. Whatever is the next closest major moving average is an ideal place to put a stop. But I don't see this going much higher than 152 in the next couple of weeks. And that's, not a whole lot of upside. It's a 10-point upside. I don't want to take that much downside risk. So I'm going to draw a little line here under this pivot point. See that little pivot point right there? That's going to be the marker for, in my mind, of where if stock traded down to that level, it would invalidate the trade. So I'm going to put my stop probably around the 136 level, just slightly below that. So stop of like 135.80 and a target of 152 for a about a 2-to-1 profit to loss ratio. So that's a good one. JD is big IBD top 50 stock. It looks like it's in a consolidation phase. We have these two pivot highs right here. One is slightly higher than the other. That's a good sign. But we've got some kind of lower lows going on here. And then we have this higher pivot low that was set a few days ago, actually last week. And so it's a little bit of a confusing picture right now. And I would stay away from this for just now because the trend line is not quite clean enough. And you've got the 20-period rolling over. You've got a tag of the 200, which is bullish, but usually you get sort of a double bottom, or you might even come back down here to test this previous pivot low. All sorts of negative things can happen. I'm going to pass on that one. OMF is also looking kind of squirrely. We had a big ramp up here that was not an earnings ramp, so I don't know what that is. Maybe an upgrade, maybe a raised guidance, something positive. Stock has trailed off into the rising 50, which is a good sign, and those three moving averages are nicely spaced. My concern with this is that it's been in this sort of horizontal trend, mostly horizontal. This is below 45% angle, and that's not the healthy kind of trend I like to see. So I'm going to keep that on the watch list for now. STLD is a big steel company, and steel companies are in the news these days because of the infrastructure bill that's coming down the pike. And this actually is a pretty nice looking trend. From left side to right side, we see a good healthy move up. It's kind of one of these trends that shoots way up real fast, too far too fast, pulls back in, shoots up too far too fast, pulls back in. So I'm a little leery about this because it's in the middle now of a kind of a pullback. We do have previous resistance and not too far away. I might do a little swing trade here, buying it at 44 with a stop loss underneath this pivot low right there. Zoom in on that. And my expectation would be up here around 48. So that'd be like a $4 move, and you're looking at a loss of maybe $3. So that's not a real good risk to reward ratio. So probably just pass on that one for now. TXT is looking like a very similar kind of chart. It's also in the basic materials space, and I like this one just about as much as I like STLD, so I'm going to pass on that. KEM is a stock that we've traded a number of times this past year. It's been a really big mover, but it got whacked on earnings a few weeks ago, and it hasn't been able to recover since then. It's sort of holding steady in this area, between 18 and 20, between 16 and 20. I'm going to hold off on that for just now. VIPS is a Russian stock, right? And so it's an ADR stock, and not really in a sustainable uptrend. It's just bouncing back up and down between 17 and 8, which is a huge range. Earnings is coming up. I'm not going to worry about that one for now. LNER is a maker of nice jets for the wealthy class, and has been a very good growth stock. But it's been in the sideways consolidation. It popped up out of that heading into earnings, pulled back after earnings, and now it's in the middle of a recovery uptrend. It's not quite where I'd like to see it. I'd like to see it down here at this level so we can get it at a lower risk ratio. But so I'm going to pass on that for just now. Best Buy has been on our buy list for months and months now as it recovered from a very deep cut low. And it has been in a sustainable trend, but it had this long period of sideways consolidation right in here. It has pulled up out of that. That's a nice looking trend. The pullback into the rising 50, I don't think this pullback is over just yet. So I'd be more interested in Best Buy coming down to that area right there, below 65. Below 65, I'm a buyer. I'm going to put my stop loss here below the 200 period moving average, and I would be looking at a high of about 80 on the next leg up. Okay, folks, that's it for this series. God bless everybody. We will see you soon. Bye now.